Welcome to the session. Topic of this session is institutional finance to agriculture. Agriculture sector is continued to be the mainstay of the Indian economy, particularly the rural economy. Agriculture sector is highly diversified sector in terms of the production environment, the activities undertaken by the agriculture sector. The agriculture sector is comprised of the small and marginal farmers. Around 80% land holdings are under the small and marginal farmers, and they occupy around 40% of the agricultural land. And the institutional support is very important in agriculture sectors, and the achievement we have achieved in the agriculture sector, the success we got in the agriculture sector, in the performance of the agriculture sector, institutional infrastructure, institutional development have played important role, and institutional finance is very important in agriculture sectors, and a number of actions have been undertaken to improve the institutional finance, actually in order to provide the credit and loan facility to the rural economy, to the agriculture economy, because the farmers, they need support to purchase the costly input, they need the support to adopt the high yielding production technology, then they need to purchase the farm machinery, they need to develop the infrastructure at farm. For that purpose, the farmers, they need the institutional support in terms of finance availability. And in this session, basically we will be discuss the institutional infrastructure development for making availability the finance in the agriculture sector. When we talk about the institutional credit institution, we can divide the whole scenario after independence into 3 phases or 4 phases. In the first phases, we can say that is from the 1947 to 1960 now. The cooperative organization, they played a major role. They were the primary vehicle to providing the credit to the agriculture sector, to the rural people. And the second phase started after the nationalization of the bank in 1969, and the commercial banks were given responsibility to provide the agriculture credit, but their major role remained the supplementary to the cooperative sector. Still the support from the cooperative sector was dominating, and the major support in terms of institutional finance, it was available from the cooperative sector. And the third phase, we can say that is started from the 1975 after the establishment of the regional rural bank, and the purpose was to make available the credit to the farmers and rural entrepreneurs and the rural artisans. And after the 90s, basically the country adopted a multi-agency approach in which the cooperative and the commercial banks and regional rural banks, they have given the responsibility to make available the credit to the agriculture sectors. So actually all these institutions, cooperative institutions, the commercial bank, and the regional rural banks, they gradually ensure that the credit reaches to the most remote rural areas in every corner of the part. The credit, institutional credit should reach that they have ensured. And actually to promote the agricultural rural credit support, the government of India, they have established this National Bank for Agriculture and Rural Development, NABARD, in July 1980, and the NABARD was given the overall control of rural credit for development of agriculture and rural sector. And recently data that is available in the economic survey, that is for the year 1920, the target for agriculture credit was 13,50,000 crores, and out of that till 30th November 2019, 9,07,843 crore rupees have been already disbursed. So there is a quite substantial availability of the credit in the agriculture sector. And this is the structure of the rural credit structure, or we can say the credit availability structure for the agriculture sectors. And here the government of India and through the Reserve Bank of India, they are the overall authority to promote the institutional finance in agriculture sector. And the government have created a special body, that is NABARD, National Bank for Agriculture and Rural Development, who look after the overall scenario, overall policy aspects, overall planning of the agriculture credit. And there are three main institutional sources for agriculture credit. One is the commercial bank, and commercial bank have their branches in the cities, in the urban areas, in the major cities, then the district levels, block levels, or in the village level. And the regional rural bank we have. This regional rural bank are sponsored by the commercial bank, and they have the location specific specialization. They know the understanding, they understand the local requirement, and they provide the credit to the agriculture sectors in that locality, and also the rural artisan and other rural entrepreneur. Then we have the cooperative credit bank, and basically we have two types of institution under the cooperative credit bank. One is the short term and medium term loan structure, that is the three-type structure, and another we have the long-term loan structure, that is the two-type system. And in the short-term or medium-term loan, we have at the state level, state cooperative bank (SCB) that work at the state level. Then we have the district level, district central cooperative banks, and at the village level we have the primary agriculture cooperative credit society (PACS), PSCS, PACS. That work at the grassroots level, at the village level. And for the long term requirement of credit through the cooperative sectors, we have the state level Central Land Development Bank (CLDB), and at the taluka levels or district levels we have the Primary Land Development Bank (PLDB) that work at the taluka level. And now we will understand the cooperative finance structure, infrastructure available in the country. And basically the cooperatives, they receive substantial help in making the provision of credit from the government of India through the Reserve Bank of India. And that is basically overall policy of the government to promote the credit support to the agriculture sector through the cooperative banks. So they got substantial help from the government through the Reserve Bank of India, and basically they have been given the large scale assistance from the central government and state government for their development, for the development of cooperative structure, cooperative infrastructure. And for that purpose, many government schemes that have the subsidy component, or they have the concession in providing services, were routed through the cooperative organization, like in the public distribution system, making available the fertilizer and other input to the farmers. So all these major schemes from the government were routed through the cooperative structure, so that there is a growth and development in the cooperative structure. And actually when we see the cooperative finance infrastructure or number of institutions, large number of the institutions were working in the country under the cooperative finance. And when we talk about the short term and medium term cooperatives, we have 98,365 cooperatives or cooperative societies in the country. They are working in the country. Out of that, there are 33 state cooperative banks. Then we have 371 the district central cooperative banks. Then we have the 97,961 primary agricultural credit cooperative banks, that is basically PACS, which are working at the village level. And when we talk about the long-term infrastructure from the cooperative sector, there are total 614 cooperative societies which are providing the long-term loan or long-term credit to the farmers. And there are 13 central land development bank which are working at the state level, or they have their branch or their office in the state capitals. And there are 601 the primary land development bank PLDB that work basically at the taluka level or district level. So this is the total number of the institutions who are providing loan credit to the farmers through the cooperative organization. And now we will discuss the functioning of these cooperative banks at the state level, district level and primary level. So at the top or apex organization in the cooperative in terms of short term or medium term cooperative bank, we have the state cooperative bank SCB, and basically it work at the state capital, in the state capital, and the district central cooperative bank or the primary agriculture credit cooperative society, they are the member of this bank. And basically this SCB, they supervise the activities of the member bank, they supervise the functioning of the district central cooperative bank or primary agriculture credit cooperative societies, and basically they mobilize and deploy the financial resources among the member bank to the bank, and then also they serve a link between the Reserve Bank of India, or we can say the NABARD, and the PEX. At the grassroots level, we have the primary agriculture credit society. So SCB or state cooperative bank, basically they serve as a link. They translate the policies or program or schemes of the RBI or NABARD to the PEX, and they also convey the problems or challenges faced by the PEX to the higher authorities like NABARD and the RBI. And basically state cooperative bank, they work as the bankers bank to the district central cooperative bank. They refinance the money to the district central cooperative bank, so they can provide the loan to the or credit to the primary cooperative societies or their individual members. And at the district level, we have this district central cooperative banks, and basically it is a link between the state cooperative bank and PEX, the primary agriculture credit society. And basically this DCCB, they are meant to meet the credit requirement of the PEX, and basically they supervise and inspect the activities of the PEX, and they also help basically the PEX, the primary agriculture cooperative society to run smoothly, to provide the services to their member smoothly. And basically their operational area is confined to the taluka level, and member of the district central cooperative banks are the marketing societies, the cooperative market society, cooperative consumer society, and sometimes farmer society. On PEX, of course, they are the member, or individual members or individual farmers, they can also become a member of the district central cooperative banks. And at the village level, we have the primary agriculture cooperative credit societies, and basically they provide the requisite short term and medium term loan to the farmer member or the people in the rural areas. And basically they also undertake different types of activities, like they supply the agriculture inputs like fertilizer, insecticides and machinery on the higher basis to the farmers. They also undertake the saving activities, local saving activities in terms of the share capital and also in terms of deposit from the villagers. And that basically inculcate the habit of thrifts, and the PEX also undertake the marketing of the farm produce on behalf of the farmers borrowers, and they also undertake the supplying activities of certain consumer goods like the rice, wheat, sugar, kerosene, etc. at the fair prices which are available under the public distribution system. When we talk about the long-term credit cooperative societies at the state level, we have the Central Land Development Bank, and basically they provide the long-term finances to the farmers, to the members, to the entrepreneurs, and basically we have the two-tier structure. And they are the apex bank, Central Land Development Bank. They are the apex bank at the state level, and basically they provide finance to the primary land development banks which work at the taluka levels or district levels, and also they also provide finance to the is affiliated branches working in the state. So, the state bank, this central land development bank, they can open their branches in the state, so they also provide the finance to them. And the member of the central land development banks are the branches of the this CLDBs, and also the primary land development bank, and the individual entrepreneurs, the farmers, they can also become a member of the central land development bank. And basically the NABARD is the refinancing agency to the CLDB. They get the refinance facility from the NABARD to make available the credit to the farmers or individual entrepreneur. And basically they undertake different types of activity. Basically they supervise, inspect and guide the primary land development banks in their banking operation. And they also float the debenture to raise the capital requirement or to raise the funds for the functioning of the Central Land Development Bank. And also they inculcate the spirit and practice of thrift among the member banks by mobilizing saving and also stimulating the capital formation. And they provide basically the loan to the member bank for the redemption of the old debt, which are loan already taken but they are not able to repay. So they can get the redemption. And they also provide loan for the improvement, reclamation and development of the land. And they also help, they provide the loan for purchasing of the agriculture machinery and equipments, and also development of the minor irrigation infrastructure. They provide the loan. And the primary land development banks basically basically they are organized at the taluka level, and a specific function of the primary land development banks include the providing long-term finance or long-term loan to the farmers for the development of the land, and they provide loan for minor irrigation, redemption of the old debt and the purchase of the land. And they also provide loan for purchasing of the tractors and farm machinery and equipments, and they also provide loan or finance for the construction of the farm machinery, construction of the farm structure. And they also undertake the saving activities. They mobilize the rural saving. And when we talk about the commercial bank, in the initial stage, there was a very less contribution from the commercial bank in providing the finance to the agriculture sector. And actually agriculture was the main occupation. It was contributing significantly in the national income, but the hardly 1% advances was provided from the commercial bank to the agriculture sector as of the June 1967. So less than 1% contribution was there from the commercial bank in providing the credit to the agriculture sector. The bulk of deposits and the contribution from the agriculture from the public sectors which are available with the commercial bank, that was basically advanced to the organized sector of the industries and trade. And there was a lot of deposits, bulk of deposit which were basically provided to the industrial sector or trade sectors. And the loan or agriculture credit was basically dominated by the private money lenders, and because there was a known availability of the financial institutions other than only the cooperative organizations were there. And the money lenders, they were charging exorbitant rates of interest. So the farmers, the agricultural community, rural community, they were facing a lot of problem in getting the institutional finance. And for that purpose, the government started thinking how to make available the credit, the institutional credit to the agriculture sector or rural sector. So that's why in the 1968 they started the social control of the commercial bank, and basically they directed that a large volume of the credit should flow to the private sectors like agriculture sector and in the private sector. And objective was to achieve a wider spread of the bank credit to the agriculture sector and rural sector. The social control did not produce the desired results. That's why government adopted the nationalization of the bank, and the On 19th July 1969, the commercial bank who were having the at least deposit of 50 crores, they were nationalized, and for that purpose an ordinance, the Banking Company Acquisition and Transfer of Undertaking Act, was brought by the Government of India, and by that act basically 14 commercial banks were nationalized. And the major objective of the nationalization was the removal of the control of banking business by a few industrialists. Actually, the loan were available, the credit were available to the few industrialists. So purpose was to remove the control of banking business by the few industrialists, and also the major purpose was to have expansion of the credit, this institutional credit, to the priority areas like agriculture sector. And basically after 1969, again on 15th April 1980, 6 more banks were brought under the nationalizations, and presently 10 banks were merged into 4 banks. So presently we have around 12 nationalized banks under the public sector who are providing the credit requirement of agriculture sectors, the rural sectors, all industrial sectors, the household sectors. So they are providing credit requirement of the different sector of the country. And then another important development was the regional rural banks. Actually, the All India Rural Credit Review Committee in the 1969, they pointed out that there is a handicap to small farmers in having access to the cooperative credit, both for the credit input and for investment purpose. So this committee basically highlighted, they pointed out some problems in making available loan to the small farmers through the cooperative society or cooperative credit structure. And basically this committee, they identify some shortcomings and limitations in the functioning of the commercial bank also in the cooperative bank. And based on this report, a working group was formulated under the chairmanship of the Sri M. Narasimham, and based on the recommendation of this working group, the regional rural banks were established through the Regional Rural Bank Acts 1976, and the initially 5 rural banks were set up, and the commercial banks, they are basically the sponsoring agency. They make available the finance or refinance to this regional rural banks. Presently we have around 45 regional rural banks working in the country. And objective of regional rural banks were to develop the rural economy. They provide support for the development of rural economy. They provide the credit for the agriculture and allied activity. They encourage the rural industries, artisans, carpenters and craftsmen, and basically they help in reducing the dependency of the weaker section on the money lenders, and also to make the other purpose is to make the backward and tribal area economically better by opening up the new branches to make the credit, to mobilize the saving. So for that purpose, the regional rural banks were established in the country. And the major characteristic feature of the regional rural bank are that basically the sponsorship is from the scheduled commercial bank. Jurisdictions are basically from one district to the 2 districts for their efficient functioning, and one regional bank may have around 50 to 60 branches, and basically each branches can serve around 20,000 people, or population of 20,000 roughly. And the management of the regional rural bank is basically through the board of directors, which may have number around 8, and basically that is headed by the chairman, who is an officer of the sponsoring bank. and the rate of interest is almost equal to the PECs, the Primary Agricultural Credit Cooperative Society, and basically in case of this deposit, they provide 0.5% more interest than the commercial bank. And then the another important development for making the credit to the agriculture sector is the National Bank for Agriculture and Rural Development. And basically Reserve Bank of India, they set up a committee under the chairmanship of B. Sivaramani, and basically the task was to review the arrangement for the institutional credit for agriculture and rural development graphic card, and basically this committee basically they recommended for the establishment of NABARD, and basically this NABARD came into existence on 12th July 1982. Basically the NABARD is an apex institutions, and basically they have been credited with all matters concerning the policy planning and operation in the field of credit and for agriculture and other economic activities in rural area. They are the apex organization. So basically the NABARD serve as an apex financing agency for the institution who are providing investment and production credit in the rural area, and this NABARD take necessary measures towards institutional building also for improving the capacity of the credit delivery system in the rural area. And for the agriculture sector, the NABARD coordinates the rural financing activities of all the institutions, commercial bank, the regional rural bank, the cooperative bank, and basically NABARD maintains the liaison with the government of India, state government, Reserve Bank of India, and other national level institutions which are concerned related to the policy implementation. And the NABARD also undertakes the monitoring and evaluation of the projects which are refinanced by it. And basically NABARD refinance is available to the cooperative banks, the regional rural banks, the commercial bank, other financing institutions which are approved by the Reserve Bank of India. And the NABARD has its regional offices in every state, and there is one sub office in the Srinagar also, and they have office in the district level also across the districts. They have the offices, and they also have the training facility. They have the 4 training establishment in the country, and here we can see this institutional share in the agriculture loan and the agriculture credit. And over the period of time we will find that share of the cooperative sectors is declining due to the increase in the share of the commercial bank. In the 1970s, around 80% of the credit was provided by the cooperative banks, and regional rural banks share was 2.3%, and commercial bank share was 21%. And slowly the share of the cooperative bank is declining, and in 2001-2002 the share of the cooperatives reached to around 44%, and it has declined to 16.5% in 2009-10, and in 2017-18 the share is 12.9. Whereas the share of the the commercial bank which has increased from 21% in 1970s to the 74% in the 2009-10, and recently the share of the commercial bank has reached to 75.1%. In the year 2017-18, and the around 11 lakhs 68,503 crore rupees were amount of loan were distributed in the agriculture sector. Out of that, the cooperative sector, they have distributed around 1 lakhs 50,000 crore loan, and the regional rural banks they have distributed 1 lakhs 40,000 959 crore loan, and the commercial banks they have disbursed the loan of around 8 lakhs 77,155 crore rupees. So this is the share and growth we can see. And the Kisan credit card is another important scheme, and basically the government of India in consultation with the RBI and NABARD, they have started the Kisan credit card scheme 1999, and aims of this credit card scheme is to basically to provide the adequate and timely support for the cultivation and other need to meet the short-term credit requirement for cultivation of crop, to meet the requirement for post-harvest expenses, and also they provide the marketing loan. Then also they provide the consumption requirement of the farmers household. They also provide the loan for working capital requirement for maintenance of the farm assets and activities which are allied to the agriculture sectors, dairy animals, or the inland fishery. And now the Kisan credit also, this Kisan credit card also provides the loan for the investment purpose, for meeting the investment requirement like pump set, sprayer, or dairy animals. This scheme is being implemented in all the states and union territories by all commercial banks, regional rural banks, and cooperative banks. And basically the beneficiaries, they are issued a credit card or a passbook or a credit card cum passbook, and that credit card or passbook basically have the information and like the name of the beneficiary, address, particulars of the land, or borrowing limits or validity periods. So all this information is there. And when we talk about the growth of the Kisan credit card, the substantial number of the credit card have been issued. Like we have data of the total operational land holding, that is the year 2015-16, and so total 14 crore 65 lakhs 32,000 operational land holding we have. And the Kisan credit card KCCs were issued to 6 lakhs 2,109 the farmers or land holding. And this data is available to 31st January 2020. So around 46% of the the operational land holding, they haven't given the Kisan credit card. Still there is a gap of 53.87% are there. So there is a scope to provide the the credit card to more 53.87% land holding in the country. And recently Government of India started other schemes. A major scheme is the Mantri Dhan Yojana, and basically Government of India started National Mission for Financial Inclusion, and that the Mantri Dhan Yojana was started in August 2014, and the purpose is to provide the universal banking services to every unbanked household. As the purpose is to provide the banking facility who have not been covered so far. So they should have, every household should have the the bank account. That is the purpose. And but recently the area, the scope have been extended. Now the target is to have the every unbanked individual, they should have the in every unbanked adult should have the account in his name. And so far 35.27 new accounts have been opened under the Pradhan Mantri Jan Dhan Yojana. And then after that, new schemes which have been started in the financial sector for financial inclusion. And now the shift is from Jan to Jan Suraksha, and various schemes like Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Suraksha Bima Yojana, Atal Pension Yojana, Pradhan Mantri Mudra Yojana, Stand Up India scheme, and Pradhan Mantri via Vandana Yojana. Different schemes have been started, and now we can sum up the session. And there is a continuous efforts to make to improve the primary sector access to the institutional sectors in terms of the cooperative bank, social bank of the social control of the bank, nationalization of bank, regional rural banks, and Kisan credit cards. And at the same time, to improve the financial viabilities of the rural finance institution, a number of the encouragement or promotion were provided, so that there is a financial viability of the rural financing institution. Thank you very much.